Okay, so it's springtime in the Low Country marketplace, and we've got two things we're super focused on right now that just sort of emerging on people's minds with regard to real estate. One is insurance, the other is real estate taxes. We're going to talk about them today. Let's get after it. Okay, Chris, so we're hanging out in your beautiful setting in the Low Country here on this amazing creek in Point Comfort Plantation, and we're talking about a couple of things that are emerging in the marketplace that we really are starting to hear and conversationally among buyers and sellers. Isn't that right?
Yes.
And the first one kind of dates back to a little bit of your history as an appraiser in the marketplace. I mean, heck, you spent, 15, 16 years in the appraisal business. Appraisals are all about evaluating the market value of a property. Who else is keenly interested in that? The Beaufort County Assessor's Office. And we're just now coming into the Quadrennial Reassessment year, 2023, where the Assessor's Office is looking at the valuation of real estate across the county, right? So let's talk about that. Like, why is that important? What do people need to be thinking about, either on the owner side, like, oh my gosh, this is a reassessment year, means my taxes might change, and maybe on the buyer side, what that looks like in terms of evaluating and being prepared for what values might be moving forward.
I think one of the key things we need to make note of is that the reassessment is going to be based on a date of December the 31st, 2022. And we all know what happened in 2021, 2022. Values went up. So what are we expecting the reassessments to look like? We're expecting them to go up. Here's the thing that's kind of interesting that people might not know. Beaufort County, for Hilton Head and Bluffton, there's only 6 staff appraisers right now that are assigned to doing all of the property valuations for this big market area. And so they're already hard at work at that. These are mass appraisals. They're not going out to everybody's house and taking pictures or anything like that. This is all just crunching numbers. And basically they'll take those numbers, they'll send it to their managers, and then they'll send it off to the state for approval. We really won't know where these appraisals come in at until probably the fall of this year, fall of 2023. And so that's really important. So the next thing to think about is when you get your assessment in, look at it immediately, because there's going to be a time limit on any appeals. I mean, basically, you got to look at the date that the assessment was mailed to you.
Right.
You've got basically 90 days from that date to file an appeal if you have one.
Right. So everybody's going to get there at some point. We think second half of the year, could be even the third quarter of this year, when they're going to get their assessment value, right?
Right.
And it's going to say, hey, here's the way we see it. We think the new value of your property is X.
Yes.
And then an owner has the opportunity to appeal that because they might not agree. Is that right?
Yes, and they need some compelling evidence.
Okay.
They can't just write a letter to the assessor and say, "Hey, you're wrong. I think my value's this because my neighbor sold." They don't want that. They won't even really look at it, and it goes through an appeal process. I mean, basically, you've got to appeal to the county assessor and to the Board of Appeals.
Right. So they've got a reasonable process, though. I mean, it's an objective evaluation process. So if they have, and maybe they get that through us. I mean, so what is supportive documentation? That might be relevant transactions leading up until the tail end of 2022. Right?
Yes, an appraisal is a really good way. An appraisal is a good way to get the compelling evidence that you need and look at things. They'll look at things like, does the assessor have the square footage of the house right? I mean, they could have material inconsistencies that will impact value one way or another. And as soon as they throw up a red flag for that, the assessor's likely going to look at that pretty seriously.
And this all means money, because basically you've got 3 components that come into your taxes, right? You've got your tax assessor's value. We want that to be right, so there's an opportunity there to appeal that as that comes out. Whether you're a 4% or 6% ratio, i.e. primary residence or second home. And then, of course, you've got your millage rate, over which we really are not talking or have any control about right now.
Right, we don't know that yet.
So we're on the cutting edge of this because we know this is happening. It's going to happen in the second half of this year. We know people are going to be picking up the phone, calling us, looking for data. We encourage that. We've got a blog post coming out that's going to have all the links to Beaufort County on the assessment process, et cetera. And we just want to make sure people are kind of on the forefront on that.
That's right. Yes, sir.
And then the other one that's happening is insurance. And what we're finding out is, and we started hearing about this on the tail end of last year, is we're now in a hard insurance market, which basically means that for whatever reason, and we can think back to the storms that devastated Florida sections last year, that there are certain underwriters and companies that are basically pulling out of the market. And what that means is you've got a tighter marketplace. You've got fewer companies that are writing, and typically what happens is the premiums are going up. So now experientially what we're hearing from people is, I just got my renewal notice and it's up. It's up 50%, it's up 60%. We even had a regime environment situation that I think theirs went up like 500 or 600%. So it's real. And so what we're encouraging people to do, what we encourage you to do, whether your insurance is here, you're thinking about buying, or you're currently waiting for your renewal notice to come in, is don't wait. Get ahead of this, because what you need to do is you need to shop, right? You need to talk to different agencies. They have different coverage opportunities. They represent different companies. And then you need to get involved and kind of roll your sleeves up on what is the value that the insurance company has. This is not the assessment value. This is what's the reconstruction value of the property in case you had a claim. Where is that? Because the other thing that's gone up, all the construction costs have gone up, right? So you need to be thoughtful about that. That could be a double whammy. You've got fewer companies writing, premiums are going up, but then you also need to be considerate of, are you properly insured? If you had a loss and you had to go get reconstruction right now, is it $200 a square foot, $300 a square foot? A lot of that depends on the location, the quality, construction, that sort of thing. So you need to be mindful of that.
And there's a lot of opportunities to work with your insurance with deductibles. I mean, not only a primary deductible that we all know we have, but these named storm deductibles. This is something people don't think about, because named storm deductible, whether it be, and it doesn't have to be a hurricane. They're naming storms. They're naming rainstorms these days. It seems like so. It's a little bit silly, but if you have a named storm deductible of 2%, 3%, or 5%, and you've got a $1 million policy, that's a lot of money.
That you've got to come out of pocket of before you can tap into the policy itself to cover costs. So there's always that balance. The two are typically inversely related. In other words, if you want your premium to go down, typically the deductibles are going to go up. But you got to be careful and thoughtful about that, because even during Hurricane Matthew, we saw some people that hit that surprise. They were pretty much insuring for worst case situation, and then they had to come out of pocket on that. So you got to be mindful about those things. Super encourage you guys to be mindful about getting ahead of that. Don't wait for your renewal notice to come in. Talk to your insurance agent now. They want to go ahead and shop those things out for you so you don't have a nasty surprise. And speaking of nasty surprises, this is an interesting one too. Kind of peel these things together, is that, a lot of folks that have mortgages, they tend to escrow for taxes and insurance, right? So one of the thoughts on that is those are typically based on what the estimates of those are. That gets a little bit harder now, because you might see the taxes changing, you might see the insurance changing. So
a lot of people do. They find that out after the fact, because their property values get reassessed, but the taxes are paid through the mortgage company. So all of a sudden their mortgage goes up, and they're trying to figure out what's going on. Now you're kind of scrambling.
Or you've got a shortfall. They say, guess what? There wasn't enough money in the escrow. We need you to stroke a check. Some people don't like that surprise. So a good idea to have a reassessment of what's happening in your escrow, if you do have escrows with your mortgage company. And the last thing I'd like to say is that if you're a buyer in the market area, these are not necessarily scary topics. The main thing is to get educated. If you're taking a look at, let's say you're looking at property, it's very commonplace, and we see this oftentimes with listings, is an agent might share, these are the expenses that an owner has right now, right? But what's the problem there?
Well, the problem is every property, those expenses can change, and they can change dramatically. If the usage changes, if it's anything that happens. I mean, if a homeowner is paying X dollars a month or a year on something, and then all of a sudden it sells, that all can change. So it's really good on the buyer to do their homework, do their due diligence, reach out to the assessor. The assessor even has on the website, you can estimate your future taxes
for Beaufort County.
For Beaufort County, you can estimate what your future taxes are going to be based on a predetermined value, maybe what your purchase price is going to be or something like that.
Yeah, and you can call insurance agents even before you own the property and say, hey, I want to buy 123 Main Street, thinking about making an offer. What's the insurance going to run me now in the new hard market? So super important to as you said, do your due diligence. Heck, the power bill could go up and down. The water bill could go up and down. Your how much Wi-Fi coverage you want could go up and down. So super important to make sure that you're not fully relying on what has happened with the previous owner,
So smart.
but thinking about what's going to be the case for you as the owner, the new owner. So, all right, well, there is another beautiful day in the Low Country. Hope this has been helpful for you guys. And as always, if you're not currently subscribing to our YouTube channel, please do.